Good morning from a beautiful Wellington morning this morning. Well, you can't really see it here as I simply look onto another building, but trust me, out there it looks amazing. It's Wednesday, the 30th of October. Yep, just one day to Halloween. I'm Hamish, and this is Kiwibank's Markets in a Minute. Well, not a lot really going on overnight, with the exception of a small miss on a US consumer confidence print. Global markets have seen a fairly muted session overnight. Whilst Asia saw somewhat of a continuation of the positive risk theme from Monday, the move petered out as Europe and US came online, with markets really on hold, awaiting for the next piece of juicy information such as tomorrow morning's US GDP numbers and FOMC decision to either get back on hitting those buy or sell buttons. Of note in this part of the world, which will be fairly significant to those with expectations of negative rates at some stage, RBA Governor Philip Lowe commented last night that whilst the RBA is prepared to loosen monetary policy further if needed, he felt that it would be extraordinarily unlikely that negative rates would be seen in Australia, and that most likely there will be an extended period of low interest rates to assist in reaching full employment and inflation targets. The comments, whilst arguably not new, did provide a further boost to an already well-performing Australian dollar across the last few days. And even closer to home, the New Zealand dollar found a little bit of love yesterday on the release of a weekend speech by RBNZ Assistant Governor Christian Hawkesby yesterday, and perhaps preceding the RBA's tone, commenting that the Reserve Bank does expect to see a lift in inflation expectations and then inflation on the back of the recent rate cuts. This has seen the market pare back pricing of a 25 basis point cut at next week's meeting to sit circa 75% chances of this morning, lifting the Kiwi dollar in tune. Later in the day, those hard-fought gains for the Kiwi were unwound a little, with the Treasury publishing a note detailing that the S&P could potentially remove New Zealand's positive ratings outlook should the economic climate continue to deteriorate, which perhaps the two kind of go hand in hand really. As of this morning, having traded to a high of 63.75 US cents yesterday, the Kiwi is back where it began yesterday at 63.5. Okay, that's it from me. Pete's back in the seat tomorrow, who will take us through to the weekend prior to the highly anticipated return of Mike. I'm sure he's been working on his one-liners all holiday. Ka kite anō.